Are you ready to make a decision that could shape your financial future? The battle between real estate and stocks is one that many investors face, but which one should you choose for your hard-earned money? So what's the best investment choice for you right now? Let's begin by exploring these two powerful investment avenues. But before that, make sure to give this video a thumbs up and subscribe to our channel. The rising tension, real estate or stocks? So, what's the deal? Are stocks really the superior investment, or is real estate the safer bet? The truth is, it depends on your financial goals, risk tolerance, and investment strategy. While real estate has long been considered a reliable, steady investment, stocks have delivered impressive returns in recent years. The decision to invest in one or the other might seem daunting, but let's break down the pros and cons of each to help you make a more informed choice. The case for real estate: a tangible asset with stability. Imagine owning a property that generates consistent monthly rental income. This is a dream that many investors have turned into reality through real estate, and for good reason. Real estate has been a long-standing, trusted investment vehicle. But what exactly makes it so appealing? First and foremost, real estate offers stability, which is one of the primary reasons many investors turn to it. Unlike the stock market, which can feel like a roller coaster ride with extreme highs and lows, property values tend to appreciate over time. This makes real estate a relatively low-risk investment compared to the volatility seen in stocks. While stock prices can fluctuate wildly in a matter of days, property values typically experience gradual increases. Real estate, as a physical asset, gives investors a sense of security. There's something comforting about owning a tangible piece of property that you can see, touch, and manage directly. Another key benefit of real estate is the opportunity to earn rental income. If you manage to purchase property in a high-demand area, renting it out can provide a steady cash flow, supplementing your income. This is particularly attractive for those looking for an additional revenue stream beyond simple asset appreciation. If the property is well-maintained and tenants are responsible, rental income can be a reliable and passive way to generate funds. However, real estate isn't without its drawbacks. One of the biggest challenges is the capital required for entry. Purchasing property often requires a significant down payment, which can be a major barrier to many potential investors. Additionally, owning and managing property can be time-consuming. Even if you hire a property manager to handle day-to-day operations, this will reduce your profit margin. You also have to consider the possibility of dealing with troublesome tenants, vacancies, and the occasional repair or maintenance issue, which can eat into your earnings. Despite these challenges, real estate remains a strong option for many investors due to its tangible, stable nature, along with the potential for both passive income and long-term appreciation. Stocks: a wild ride of high returns. On the opposite side of the spectrum lies the stock market. The appeal of high returns in the stock market is undeniable. Stock prices can soar, sending your investment to new heights. But how reliable are stocks in today's economic environment? Let's dive into that. Stocks have historically delivered impressive returns. Over the long term, major stock indices like the S&P 500 have averaged annual returns of around 10%. From the 1980s to today, the stock market has been a powerful engine for wealth generation. This is especially evident when you account for the power of compound returns and reinvested dividends. Stock investments can lead to explosive growth over time, something real estate may struggle to match in terms of short-term returns. What makes stocks particularly attractive is their flexibility. Unlike real estate, which requires time and effort to manage, stocks are liquid. You can easily buy and sell stocks, meaning you can access your money much more quickly if needed. Additionally, the introduction of exchange-traded funds, ETFs, and index funds has made it easier than ever to diversify your portfolio with relatively low amounts of capital. These funds allow you to spread out your risk while investing in a broad range of companies, which helps shield you from the volatility of individual stocks. However, with high returns comes significant risk. The stock market can be incredibly volatile, with prices fluctuating drastically from one day to the next. A single global crisis, a sudden change in interest rates, or even a disappointing earnings report can cause a stock to plummet. This volatility can be unnerving for some investors, especially those who prefer more stability. In some cases, like during the global financial crisis or the pandemic, the stock market has seen steep declines that affected millions of investors. Timing plays a critical role in the stock market. Investors who enter at the right time can see their portfolios soar, while those who enter during a downturn might struggle to recover. For investors with a higher risk tolerance, stocks can be a lucrative option. They offer the potential for growth that real estate simply can't match. But for those who are more risk-averse or prefer more stability, stocks can be a difficult road to navigate. Risk and reward: balancing your portfolio. When it comes to risk, real estate is often seen as a safer bet. While property values can fluctuate, they tend to be much more stable than stock prices. Real estate doesn't experience the same kind of sudden and sharp drops that stocks do, making it a less risky investment in the eyes of many. However, that's not to say real estate is free of risks. On the other hand, stocks present a higher risk, higher reward proposition. Stock prices can swing dramatically, and downturns in the market can cause substantial losses. But with this increased risk comes the possibility of much higher returns. The key to investing in stocks is managing this risk effectively. If you're willing to endure the ups and downs of the market, stocks could be an excellent choice for growing your wealth. But if you are looking for something more predictable and less stressful, real estate may be the better path. The real estate advantage. One significant advantage that real estate offers over stocks is the ability to use leverage. Unlike stocks, where your returns are based solely on the capital you invest, real estate allows you to borrow money through a mortgage, allowing you to control a property worth much more than your initial investment. This leverage means that if the value of the property increases, your return on investment can be much higher than it would be if you invested the same amount in stocks. For example, if you buy a property for $500,000 and only put down $100,000, the leverage allows you to control an asset 5 times the value of your initial investment. If the property appreciates by 10%, you're making a profit on the entire $500,000, not just the $100,000 you initially invested. This kind of return is not possible with stocks as they don't offer the same level of leverage. However, leverage can also work against you. If the value of the property declines, you're still responsible for the mortgage, which can lead to significant losses. While margin trading in stocks offers some leverage, it comes with its own set of risks, as stock prices can be more volatile and unpredictable. Real estate versus stocks, which one should you choose? By now, it's clear that both real estate and stocks have their own distinct advantages, and the right choice depends on your financial situation, risk tolerance, and long-term goals. If you're looking for a tangible asset that provides both steady income and long-term appreciation, real estate may be the better choice. It offers stability, passive income opportunities, and potential tax advantages that stocks cannot match. Real estate is ideal for those who prefer predictability and want to diversify their income streams beyond just capital appreciation. On the other hand, if you're willing to take on higher risks in exchange for potentially higher returns, the stock market offers incredible growth potential. With the right strategy and a long-term view, stocks can generate substantial profits in a relatively short period of time. Stocks are best suited for investors who can handle volatility and are comfortable with market fluctuations. So which side are you on, real estate or stocks? Both offer unique benefits, but the right choice truly depends on your personal financial goals and how much risk you're willing to take. What's your take on this investment debate? Have you leaned towards one over the other? Let us know in the comments below. If this video helped you make a more informed decision, don't forget to hit the like button, share with your friends, and subscribe to stay updated with more insightful investment tips.